you've been predicting volatility for weeks too, and I think that's exactly what we're seeing with this rate cut. It didn't just magically solve some of the economic concerns and issues that people have. How long do you think the market could be in this volatility stage?
I mean, it could last for months. You have to remember that the situation we're in is the result of not just the last 2 or 3 years of stimulus spending and inflation, but also the preceding 10 years of easy money policy and the Japanese yen carry trade. The carry trade is really significant because that's been building up for years, people borrowing money from Japan to lend to the United States. And that money has to come back and be paid back to Japan, which means that there's going to be a lot of selling. So I would expect any market uptick to be followed by a downtick as people sell into the rallies. But again, so far as the soft landing scenario is still in play, any downtick should also result in a buying opportunity for stocks that are presenting values.
Yeah, let's talk about that a little bit more. What does all of this volatility mean as far as potential opportunities for traders?
Well, right now, with recession not on the table, I mean, it's on the table, but it's just a risk. It's something we're worried about. It's not up in our face. I would expect the market to move sideways with that same dynamic I just described, selling into the rally to take profits and close out the carry trade, also moving to flight to safety. But any downtick should result in a buying opportunity as people focus on their values. Now, the big risk is that the labor data or other data will start to point more significantly towards a recession, and in that scenario, we might start seeing more intensified selling, more flight to safety selling, more risk off selling, and that could lead to a more significant market downturn.
In your article that you wrote, which I'll link to here, you also talked about this rate cut is going to take months potentially to even be reflected in the data. Talk about that a little more.
Well, right. It's generally accepted that it takes 12 to 18 months for a single 25 basis point cut to fully impact the market. So we're looking at a quarter or two before we start seeing significant changes in the data, which gives us 6 months of upcoming PCE, CPI, and labor data that is going to drive volatility. As I said before, any good news is going to cause the market to go higher, but any bad news will cause it to move lower.
And one last thing I want to close out with today. This is the first rate cut we have seen in years, but some people are predicting potentially even more yet to come. Do you think we're going to continue to see this aggressive approach?
Well, the Fed has indicated that. They've indicated that they want to cut another 50 basis points by the end of the year and another 100 points next year. And if they do that, it just plays right into what I've been saying. They're either going to usher in that economic shift sooner than we expected, or they're trying to front run a recession. And again, we're just waiting for the next few months of data to understand, are they actually going to cut more, or do they need to keep rates where they are now, or possibly even raise them back up again if inflation starts to rise again? Because you have to remember there's still a lot of demand in the economy. Consumers are still spending, even though the housing market is pretty crappy. Um, People want to buy houses. So if the price of houses starts to fall, inflation or interest rates start to fall, it's going to spur demand in that sector. We can already see oil prices starting to move back up again. All of those things play into inflation. I think that ultimately we're still walking that tightrope. The Fed still has plenty of risks. We're still data dependent, and the next few months are going to be very telling.
Well, we will continue to watch how well they balance on that tightrope they're walking right here on MarketBeat in the days and weeks and months to come. Thanks for joining us for this market analysis, Thomas, and thank you for watching MarketBeat Media. Subscribe and like our channel, comment, and join the conversation to stay tuned for more market news right here on MarketBeat. As always, happy investing.